If you know how to utilize options, you can dramatically improve your swing trade. My name is Phil. I've been swing trading for over 6 years, and when I first started back in 2019, I also had no clue how options work. But after learning about them, utilizing them, and combining them with my swing trading strategy, I'm now at the point where I can literally buy a bunch of fancy stuff which no one really cares about. So let's start with the education. Today we are going to take a look here at charts, and it's very important that before you actually watch this video, where I obviously break down how we apply options to the swing trading strategy, it's very important that you first of all watch video number 1, the previous video, where I completely break down how options work. Actually, let's remove the sunglasses because I can't see anything. Today we are going to take a look at 2 examples of swing trades which I personally took with Academy traders. First thing in the description, I also shared this for free inside the Free Swing Trading Academy, obviously earlier in this channel. You can just go ahead and verify everything by yourself. And we're going to talk about 2 swing trades which I took with Academy traders, and I took both swing trades with options. Starting immediately with swing trade number 1. You can see we are taking a look here at the chart of NVO. You know the simple 3-step process. First, we have to identify the underlying trend, which on NVO is clearly towards the upside. Second, we actually have to take a look here at structure. You can see that NVO has continuously been retesting this support trend line, basically starting all the way back in 1987. And here, always when NVO retested this trend line, we actually saw a decent rejection away towards the upside. We saw another retest in the end of 2025, and that's exactly why I said, okay, look, Academy traders, I'm actually looking for a long position inside of this area here on NVO, just because we have this major support trend line. However, at the same time, you can see that NVO was also retesting a major horizontal support exactly at this psychological $50 level. So we actually had a triple confluence of support inside of this structure, just further increasing the probabilities of a move higher. Last but not least, I was also anticipating a significant trendline breakout on NVO. So we had quite a lot of signs actually telling us that NVO is heading for a major rejection. Obviously, before we take a setup, we still have to take a look at confirmation, but confirmation, just trust me, appeared here on NVO inside of this level. So it was now time to actually take a look at a potential swing trade. Now, instead of just swing trading this with the regular stock, you enter here, you put your stop loss just below all of the structure, and then you go ahead and have a reasonable target. Also here, just something which I share over and over again in the Free Swing Trading Academy. But this time we are not going to use the regular stock. In fact, we are going to use options. Here, TradingView offers something extremely simple. You can just go to the bottom right where it says products and hit options. Then you can actually see the options chain of the symbol which you are looking at. In this case, we are looking at NVO, and you can see we can now see the NVO options chain. Also here, if you're not familiar with this options chain, just make sure that you watch the previous video, because there I broke down what you can all find inside of this options chain and how options work. If we actually want to swing trade options, it's very important, and that's also something which I broke down, that we keep track of 2 metrics. Metric number 1 is the expiration date, which you can find up here. You can see March, we have a couple of expiration dates in April and May, June, July, 2027, and then even all the way until 2028. So it's very important that you first keep track of the expiration date. The second only metric which you have to measure is the strike price. So the price which, if you buy call options, allows you to purchase the underlying asset at the strike price. The expiration date together with the strike price are all you need, nothing else. So what do we actually have to do when we want to enter a swing trade with options? First of all, it's very important that you pick a suitable expiration date. Obviously, we are looking at the higher time frame. In fact, I am doing my analysis here on the monthly time frame, just because it gives me a ridiculously high accuracy and a very high win rate. But therefore, when we're looking at options, it doesn't make any sense to purchase options which have an expiration date in 2 weeks. It doesn't make any sense to purchase options which have an expiration date in 4 weeks. It also doesn't make any sense to purchase options which have an expiration date in 2 months. Since if we're looking at the monthly time frame, and for example on NVO we do expect a rejection of 20, 30, 40, 50, maybe even new all-time highs, then it simply doesn't make any sense that we pick an expiration date of 3 months, since in 3 months our swing trade most likely won't have played out yet. In fact, if you want to swing trade options, and obviously we have clear rules with Academy traders, but if you want to swing trade options, I always recommend going out at least 6 months, if not 9 to 12 months. So you're really giving your swing trade some time to play out. So let's pick, for example, 6 months out. March, April, May, June, July, August. In this case, you can see we have no August options. So I would either go ahead and use July, September, or anything beyond September. After we actually paid attention to the expiration date, it's now time to take a look at the strike price. And here, this depends on your setup. It's very important that you have clear rules on what to do. But as we were speaking, you can see that NVO was actually trading exactly at $50. And now we have to take a look at a suitable strike price. On NVO, back then, you can see that NVO was trading at $50. And I was personally targeting the $60 level first, just a simple 20% move towards the upside. And if we then see the confirmation of this resistance trendline breakout, we will most likely see a continuation towards the upside. However, if we fast forward here on the monthly time frame, you can see that yes, we had a little bit of back and forth, but NVO started to actually break above the trend line, but with the next monthly candle immediately broke back below, so therefore totally invalidating this trend line breakout. When NVO was trading at $50, I actually said, okay, look, expiration date is clear, we have to take a look at the strike price. And obviously, since I was not expecting a parabolic rally first, I was just expecting a slight move higher, I actually purchased options with a strike price exactly at the $50 level. This means that anything above $50 plus the premium will already be profit, and I was also really focusing on closing out partials, if not a full position, if NVO does not actually hold above this resistance trend line. In fact, let's quickly run through the numbers. I had my strike price at $50. I paid a premium of approximately $6, meaning that my break-even price would be exactly $56. Then you can see that over the course of the next couple of days, in this case, NVO came all the way up to $63, meaning that my option, which I paid $6 for, was all of a sudden worth $13, because obviously you can still purchase it at $50, immediately sell it at $61 to $63, which gives your option a value of approximately $13. This means that over the course of just a couple of days, I was able to turn my $6 into $13. And obviously, if you purchase, for example, 10 grand worth of options, you turn those 10 grand into 20 grand. Here, as I mentioned, expiration date was quite clear. Strike price, in this case, I just decided to pick the psychological $50 level since I was not expecting a crazy move towards the upside. But overall, it's just important that you have clear rules on what to do, which you can repeat again and again and again. Therefore, let's take a look here at the second setup, which we took with Academy traders, PepsiCo. And let's once again go back to the replay tool to step by step go through everything. Here you can see quite similar analysis to NVO. PepsiCo was just over and over again retesting the support trend line. Obviously, the underlying trend is towards the upside. And we also had a very nice retest of this previous horizontal support at roughly $130. So also here, even if we take the psychological number into account, a triple confluence of support telling us that we will see a move higher. Obviously here we can now also take a look at the PepsiCo options chain, but obviously this swing trade was already entered a couple of months ago and we already closed out our full position. But let's just say hypothetically how we have to approach it. First of all, as I mentioned, expiration date, we have to pick something which is not just 2 weeks out. I recommend 6 months and more, so you would once again go with the September options. You can see that at the moment, September options are roughly at $12. Obviously, you have to multiply everything with 100, so you would have to pay approximately $1,200 for one option, which generally speaking is considered quite cheap. Back then, however, you can see that PepsiCo was trading exactly at $130, and you can see that over the course of the past couple of months. Here it was a little more tricky since we actually witnessed quite a lot of back and forth, but over the course of the following couple of months, you can see that PepsiCo ultimately created a rally from bottom to top of approximately 26%, hitting this $170 area. In fact, here you can see that overall PepsiCo has quite a slow movement, so I decided to pick options which have an even further expiration date, just to give PepsiCo some time to move back and forth, some time to create a healthy rejection way towards the upside. And in this case, you can see it was perfectly needed because we stayed in this position for roughly 220 days. So let's once again run through the numbers. Obviously, you want to know which strike price I actually took on PepsiCo. And here you can see if PepsiCo actually rejects this level towards the upside, there is a quite high chance that it will come back to retest the previous support, which is turned resistance. Now, breaking it down to the bare minimum, you can just go ahead and once again pick strike price roughly at $130, but obviously there was a higher chance that this setup plays out. So you can also, for example, just pick a higher strike price, for example, $140. In this case, we paid a premium of roughly, once again, $12, just like we took a look at the options chain just a couple of seconds ago, which means that therefore our break-even price is if PepsiCo hits $152 and everything above, we make money. As I mentioned, over the course of the next couple of months, PepsiCo rallied roughly 25%, hitting the $170 level, which means that we have a strike price of $140, it hits $170, our option is worth $30, minus the $12, which we actually purchased the option for, means that we're left with a profit of $18. Here you can see that in this case, over the course of a little more than 200 days, those $12, which we purchased the option for, turned into $18, meaning that also here we more than doubled our money, while PepsiCo, so the underlying asset, only rallied 25%. This also just gives you a clear explanation of why options actually offer us leverage. In this case, PepsiCo rallied 25%. We actually had a 4x, so 4 times more movement with the underlying option. But also here, giving it some time to play out, not picking an expiration date which is in 2 weeks, not picking a strike price which is ridiculously high since we want to be in profit quite soon, and then just overall giving PepsiCo some time to play out. As I mentioned over and over again, something which I continuously share in the Free Swing Trading Academy, you can just go ahead and check it out, first link in the description. There I'm also continuously talking about options because they simply just offer a decent way of over proportionally capitalizing during these moves towards the upside. But just to give you a quick summary, it's extremely important that you exactly know which expiration date and which strike price you have to pick, and then options just offer a great leverage and they allow you to over proportionally capitalize. All of the stuff which I've just broken down, you can see me do it every day live for free in the Swing Trading Academy. You can just check it out, first thing in the description. I will see you next week, then just covering a bunch of charts so you can go ahead and start implementing what you learned over the course of this video and the past video. I will see you inside the Free Swing Trading Academy. As always, don't get caught up in any of the short-term volatility. Keep your long-term vision.